Okay, let's kick things off then. So I'm Jared Dugdale. I'm the publisher of Credit Today, publishing director, and welcome to this first ever Saas Comms Summit. We've got there in nice red letters the purpose of our communication, which is the future of customer communications. Very grateful to all the partner organisations on board, in particular, of course, Sascoms, who is a co-host of this event. It's a joint event for today. So grateful to those guys and to everybody else. Okay, just sort of moving on. A quick apology. We wanted to do this face to face for the first time. Weren't quite able to pull it off this time round. Let's see for future years. I for one, I'm happy to talk to any organisation or even have a face-to-face visit to talk through some of the issues involved. If anybody wants a bit of on-site consultancy, and I'm sure the other guys here today talking will also consider doing that. The themes of the event, I mean, it just struck me that the main theme of this event really, above and beyond everything else, is customer service. That's why we're here. So we're trying to improve customer service and achieve excellence. Beyond that, we're looking at customer service through the lenses of communication and data science. Can we do this event again in the future? Who knows? It strikes me that this whole sort of field of customer communication is something that needs like a large event. It seems to make sense in theory. Let's see if we can manage that in practice. The relevant sectors for today then are debt recovery, dear to our heart at Credit Today, of course, and dear, I think, to the consultants as well on board. We've got 343 local authorities in the UK, a plethora of energy suppliers and water supply firms. So there's lots to get our teeth stuck into if we can gain some traction in the industry and really start to develop the conversation in relation to communications. I know that Sascoms, for one, are expanding and got a presence in different sectors. We too would like to replicate that at Blooming Group. So we move beyond finance into health, transport, geography, and place, and even the local environment. You know, if you want to report to your council to rubbish on the streets, or you want to get an amendment to your appointment at the barbers, then communication is the key. And that, I think we are all agreeing, revolves on one key concept, which is data. Okay, so moving on, just to sort of re-emphasize this focus for councils and utilities. I do think this guy was quite funny back in the sort of late 80s, 1990s. Vic Reeves, something that he said, I think that 85% of statistics are complete nonsense. Well, that's something for us to think about. Now, it would be great if we could start to prove a bit more scientifically, a bit more quantitatively, some core hard statistics as to how we can help these organizations. And this is, just an example off the top of my head, made up on the spot, as it were. 79% of debt recovery conflicts, we can resolve them quicker with a 51% uplift in communication strategy and software. Here's an anagram for you. Your boss is called Tom, and you're panicking. You can't see no money, Tom, or your debtor is keeping you at bay by saying you can't see no IOU. Maybe that means you've got your communication wrong, in the wrong order, or you're just not doing it right at all. So let's get that right. I think that that the consensus is from all the panelists and taking soundings from the industry before today's event, we are seeing anecdotally a step change in the way that organisations want to communicate when they are trying to do debt recovery. So I think we're at the start of a staircase, a stairway to some form of heaven in terms of perfect communication systems. It's always a big question in philosophy. What is, for example, communication? Is it an art or a science? What is that picture there, Anna? Is that who's the artist? Raphael, I believe, isn't it? From the School of Athens. But we have some questions on the left-hand side there to think about what sort of ideal system are we trying to move towards. Today, for our discussions, we've got absolute experts in the fields of customer contact, communication, and data analysis. I think it's a dream team for today and to prepare the report that we will make throughout the course of this the course of this month. Just some technical information for people looking at this. Recordings, slides, contact points will be available. As mentioned, we are going to produce a short introductory training guide to getting your communications right for councils and utilities by the end of the month. So my final message is get in touch with the guys here. They're waiting to help you to revolutionize your approach and merge compassion, because we want to do debt recovery right. Probity, we've always got the eye on the bottom line, and we want to use that, or we want to get to that point using state-of-the-art technology. We have questions from the registrants that we're going to replicate for the webinar following this introductory session. So that's it for me, and I'm going to hand over the microphone to my co-host, who is Paul Neal, who is the director of the newly rebranded Saas Comms.
Thank you, Gerard. Can you stop sharing, please?
Okay, there we go. Thank you. Sorry about that.
That's okay. Great. Hopefully everybody can see that.
Sure.
All good.
Okay. Excellent. Well, thanks, as Gerard said, a warm welcome to the first Saascoms and Credit Today Summit. We've been working with Gerard and Credit Today team for a number of years, and we've decided to co-launch this event, really in order to provide an opportunity for proven providers within the credit collections industry and collections and arrears functions to collaborate on digital comms and data-driven engagements. We truly believe it's communication and data that are the primary enablers for positive resolution. We hope that the forum will be useful, provide insights, further discussions, and potentially opportunities for everybody involved. I'll quickly just touch on our speakers today. Mark Adams from Smooth Consulting. I worked with Mark over 20 years ago, where he was the head of an expanding customer service team for the UK's fastest growing telecoms company. Mark works with some of the UK's largest brands, focusing on driving contact engagement and digital service design. And Simon, who's the sales director for an organisation called Data on Demand. Data on Demand provide financial trace and vulnerability identification data, which is used by a plethora of consumer credit debt collection agencies, debt purchasers, and in-house collections teams. Data on Demand and Sascoms work in partnership, and our systems sync, so we are able to offer a one-stop solution. A little bit about us at Sascoms, as Gerard mentioned. Our legal entity is Complete Communication Solutions, or CCS as short, and we were branded in January 2022 as Sascoms. We're formed in 2004, and we are a digital customer engagement provider. We specialise within the credit and collections industry, working with over 25 large financial service organisations, and our platforms are used by circa 600 brands throughout the UK, in part Europe, North America, and as far as Australia and New Zealand. We believe our innovation, knowledge, and support have identified as the market leader. We're tried, tested, and we've won awards within the credit and collections industry for engagement solutions and AI technology. And as you would appreciate, we're ISO 27001 members, supplying members of the Credit Service Association, and DCloud 12 accredited. So why the move to digital contact? Well, debt recovery can be a highly emotive experience that requires a convenient and sensitive, sympathetic approach. And by allowing customers to choose how and when to engage with you offers the foundations for a meaningful resolution. It's a changing world, even more so since the pandemic. Customers' expectations have shifted within the last few years. Customers expect more choice and convenience around their lifestyles. There are fintech disruptors within retail, utility, travel, and banking, that are all challenging how traditional business methods are used. The emergence of AI, artificial intelligence, AI can help make the customer experience more streamlined, filter and route inbound queries quickly and effectively, predict via using natural language analysis, customer sentiment and intent, which can help identify potential vulnerabilities. And the new generation, we did a poll in 2021 with Credit Nation, and 89% of all consumers polled suggested that their number one preference to communicate with organizations was either messaging or another form of digital communication. On average, people check their mobile phones 9 times an hour, and it's now become the hub of our lifestyles. We make payments, do our shopping, read the news, all on our smartphones. The top 5 daily phone activities are: number 1, text messaging; number 2, emails; number 3, use Facebook; number 4, use the phone camera; number 5, read the news. Actually, making a voice call is not the top 10 of the daily phone activities of the majority of users. So just stressing how important digital and smartphones have now become in our world. How can you leverage digital solutions? Well, there are a number of ways. Number 1, self-serve. Very few organizations via their current infrastructure or website provide the option for a true self-serve experience. For example, making a payment arrangement or making a payment, reading correspondence, conducting an affordability assessment or any other debt treatment tool. A lack of self-serve can cause your customers to have to telephone to call your inbound number, which is a potential barrier and will result in a percentage of your customers disengaging right there. You can use AI, use it to assist your customer experience, free up your advisor resource, allow AI to do the heavy lifting, for example, doing the ID and validation checks ahead of starting the communication, just taking some of that time and process from your advisors, answering your most frequently asked questions. And more importantly, AI can assist in identifying vulnerable customers across a plethora of digital comms, live chat, email, or text message. The current economic environment may very well lead to a greater dependence on more in-depth financial assessments with your customers, which are going to equal longer call times. So AI can help your organization free up valuable and expensive advisor resource. And then we have low-cost messaging, digital letters, emails, SMS. Royal Mail have increased their costs by 12% in 2019. We did a survey with users, and the upshot was they're all looking for alternative ways to engage with their customers. For example, rather than sending a traditional letter via Royal Mail, which can be cost expensive to do and time cumbersome, you could send a secure digital message by text message, 80% cheaper, quicker to deliver, read receipt metrics, etc. One of our customers only a few days ago trialed secure digital letters, and they got a return on investment 1,300% for the batch of correspondence that went out. Also, SMS and emails are ideal for lost contacts, broken arrangements, or settlement offers. A nice, cheap, and very effective way to keep in contact with your customer base during any of your resolution period. It's also becoming more important in your contact strategy. You've got to have equal facilities to that of your peers. Two-way conversational messaging is really becoming a valuable business tool with a collection of areas. Two-way SMS. A case study from one of our credit consumer clients suggests that one digital advisor can do the same work, collect the same value within a month of 6 telephone advisors. Some contact rates, typical contact rates that we see in the industry. This is within the consumer debt industry. In your traditional methods, making an outbound telephone call, traditionally a 3% outbound right party contact, sending a letter, 5%. But digital can work equally or slightly better than some of these traditional methods. For example, sending a text message can get the same RPC rate as a telephone call, but it's quicker. It's quicker to do, and it's a lot cheaper. A secure SMS, a secure digital correspondence, we actually see a slight uplift on a traditional letter, Again, it's quicker. It's another alternative. And emails, sending typical HTML emails. You can send a secure email where you can ask for ID and V before the email correspondence is shown, so you can get greater information, more confidential financial information. There are a range of digital tools that will equal or outperform your traditional methods. That's not to say the traditional methods shouldn't be used. This is all about having more tools in your kit bag to communicate with your customers. So what do we offer Sascoms as a product? So Sascoms offers two products: Mailmaster, which is a one-way communication tool, and Omni Reach, which is a conversational platform. Mailmaster is a SaaS platform with a suite of communication tools that let you contact your customers via digital letters, secure emails, basic text messages, secure portals where you can create a mini app on the phone that you can push to your customers, where they can make payments, do income and expenditure surveys, etc. You can upload the content by a manual upload, SFTP or API, and all the services are standalone. Means you can just use one, two, or any of them. No setup, no commitment. It's a pay-as-you-use transaction solution. We also on the platform have data append and number validation, where you can load files. We can go and find data append information that Simon's going to touch on his slides in more detail, and number validation, where we can check that either the mobile telephone number or the landline number is live and ready to receive a call, or if it's bad data. Omni Reach is pretty much the most advanced messaging platform available today. It centralizes all your non-voice comms together. So whether it's SMS, web chat, secure inbox chat, email, WhatsApp, Facebook Messenger, it provides your agents, your advisors, with a single interface. They can manage all these correspondence in one place, regardless of what channel your customers communicate to you with. And if you've got multiple customers that communicate on multiple channels, Omni Reach will send the advisor's response back out in the same manner in which it was received. It also has a trainable chatbot that's attached to it that can use natural language processing to read the chat, assign actions or workflows dependent on your business requirements or intent and sentiment. Our chatbots, we have a dedicated credit and collections chatbot engine. We have analysed multiple millions of collections and arrears conversations throughout our platform, and before this went live, to ensure that we have a very high sentiment and intent matching criteria. And Omni Reach, because of the chatbots, because of the AI, can offer around-the-clock actions and workflows. So we offer a 24/7, 365 solution to your customers. So essentially, what's it going to do moving to digital? Well, it's going to improve your bottom line. It's going to allow you to do quicker, faster resolutions, manage your clients' communications in a much more effective manner. It's going to maximize your client engagements. They're going to be able to pick how and when they message and contact you. You're going to give them the options. And of course, depending on provider, Saascoms offers a no expenditure, no dedicated API, no contract commitment to your organization. You really can just trial this and see if it works for you. Just wanted to cover off what's happening in the current economy and how that's potentially affecting credit collections. We all know with inflation, it's linking to your customers' cost of living, their energy, fuel, food, childcare costs are all increasing, but it's also touching every point in your operation too: salaries, supply costs, Royal Mail increases. We already said since 2019 they went up 12%. Your telco costs. The chief executive of Lloyds Bank came out in July 22 and said that the vast majority of their customers have less than £500 in their savings accounts. So people are barely managing. The inflation, cost of living increasing, and potentially increasing for the next 6 to 12 months. That's only going to get tighter. In June 22 this year, the major UK telecom companies, Virgin Media, Vodafone, Three, Sky, TalkTalk, BT, etc., all came together and proactively agreed to identify and assist vulnerable customers. They're going to support them to switch to cheaper packages, or agree to pay, agree to more manageable payment plans. These are just some figures from PayPlan. PayPlan recently confirmed unprecedented demand for debt advice. 2021 was the busiest year on record, with over 112,000 customers being supported. And the trend's continuing to 22, with a 32% year-on-year increase for the same period. PayPlan are now forecasting an additional 30% growth in their services for Q3 and Q4 of this year. So, as we say, things are certainly going to get worse before they get better. During our poll, we went out to see what our clients were saying. These are the people at the coalface who are dealing with customers in arrears on a day-to-day basis. Essentially, the feedback was that they're seeing an increase in account volumes, but more importantly, they're seeing people who are unfamiliar with the debt process than previous years. And I think that probably links back to PayPlan and the cost of living increase and what the Lloyds Bank chairman said. People that are actually not used to debt or unfamiliar with the process are now finding themselves there. Right party contacts and inbound contacts have increased significantly within utility sectors, and our customers have seen a number or a big increase in the level of utility arrears. And there's still the expectation that customers still want to pay. They want to pay what they can afford. So there's the belief that customers are going to enter into payment plans, and that will continue, but they will be for lower monthly values rather than full settlements. We're expecting to get the money back over a longer period of time. That doesn't mean there aren't opportunities for the industry. I think there are the opportunities to support your clients even earlier in the arrears process. Affordability checks for people that are struggling or looking to struggle, making missed payments are going to help reduce any payment plan breakages or communication breakdowns. And identifying the vulnerable customers is even going to be more paramount moving forward. Just a real synopsis of quotes that have come back from customers that really underline what we're saying. They're accepting operational costs versus the collection value is going to rise, but having some digital strategy will help mitigate them as a business or an organisation on their operating costs. There's going to be increased arrears. That's going to need consideration to scalability. Those with strictly human-centric collections facilities, people on the phones, they might identify their limitations through capacity very quickly, which obviously limits your reach and your engagement levels. And self-serve technology is becoming more and more important, which can be an issue for organisations that have not already invested or haven't already looked at providers that can offer this for you. Thanks for your time, and I'll hand back to Gerard.
Thank you, Paul, for your excellent presentation. And let me swiftly move the baton to Mark Adams, who is the Director of Soothe Consulting.
Thanks, Gerard. Morning, everyone. Yeah, my name is Mark Adams. I am the owner of Saas Consulting, which I set up earlier this year. And before that, I spent 5 years as the customer service director for a digital utility company in the UK, owning service as well as all the operational teams, including collections and some of our digital channels. And I'm going to talk a bit about that in a minute, give you a bit of a case study of what we did there. But before that, a quick overview of what we do at Soothe. So we focus on 3 areas. The first one being all around our around service strategies. So whether that's service, whether that's sales, or whether that might be collections. So we help people with that service design and specifically focusing around digital design. And then linked to that, we look about building the right culture. I think lots of people or organizations put lots of digital stuff in, but forget about the organizational design part of it and people's roles. So we look at that as well. And then finally, we focus on performance improvement. So if an organization needs to achieve a target, move a number, we can help them and support them with that as well. So that's what we do at Soothe. Like I said, I wanted to talk a bit about Pure Planet. They were GB energy supplier, renewable, so 100% renewable electricity, 100% carbon offset gas. We had a team of about 200 in the whole company, about 150 of which worked across my teams in the operations. And we had about 250,000 customers. And our approach from day zero was to only offer digital channels. So we had no inbound telephone line. It was all purely digital, and we did that on purpose. We did it consciously. As a relatively new entrant into the market, we could take advantage of all the new technology and deliver a lower cost to serve model. So for anybody that's worked in energy, there are very small margins. So eking out every penny and pound is really important in terms of that cost to serve. So we offered just purely digital contacts. And I remember at the time when we went live that people thought we were mad because nobody could phone us up to pay their bill, which people saw as a risk, which is definitely a challenge, but it just makes you think harder about how you can use digital tools to achieve your company goals. So you'll notice loads of logos and you're familiar with loads of them, and Paul did a great job about calling out about messaging. I think something like 80% of the UK population have WhatsApp in their pocket, so which is astounding. And at the same time, I contact everybody on WhatsApp, so it shouldn't be that much of a surprise if I'm honest. So there are just loads and loads of digital channels out there that you can use. And often when I talk to companies, they sort of want to offer as many as possible to be there for their customers. Whereas I'm not sure that's ideal. That's a lot to manage. That's a lot of cost. That's a lot of infrastructure potentially. And people often talk about deferring contacts. So we'll introduce chat and that will defer contact. And I'm not always convinced that's the case. I think open a new channel, give people more reasons to contact you. So it actually can increase. So thinking about your mix of digital channels that you want to offer is really important. And what we did at Pure Planet was we limited it. So we had an app, we built an app and people could message us through that. We also had a web app that mirrored that exactly, which so customers could go in there and do everything through the web app. We also did social, but we limited it to Twitter and Facebook. There were a lot of people in our company that said we should do Instagram, but I'm not sure energy is that exciting that you take photos of your light switches. So we managed to resist that and just focus on Facebook and Twitter. We had good old email, but we were trying to phase out email for us and focus everybody into the app. But we also had an online community, and communities seem to be a bit of a hot topic at the moment. So ones that you might know are like GIFGAF, lots of mobile companies will have communities. Often if you search online for an answer, it will have a community link somewhere first. And we had a community of about 100,000 people in total that was offering peer-to-peer support to our members. So it was really cost effective for me. I didn't have to pay people to answer those questions. We had people in the community that were doing that for us. And also it sort of shared the knowledge across our base, as well as people answering those questions. We could put our frequently asked questions in there as well. So it was a brilliant resource, and it probably outperformed all of our expectations in the business in terms of the volume of people in there, the amount of contact and the engagement that it drove for us. It was a really phenomenal community that we had, and it really helped. And the thing about all of these channels that we chose is they're available 24/7. There's no concept of opening hours. So all of that information was available to people all the time. So if they worked the night shift, they could still go and get the information. It didn't matter what time my team were there. Everything was available through bots and those kinds of things as well. So it was consciously designed not to offer all the channels, the ones that we thought were right for our business operation and for our customers, and to be available to our customers at all times. And in particular about collections, I guess, which is a good theme for today, that was all digital as well. Like I said, there was no inbound calls. we had a very small, or I had a very small team of 3 people internally that would oversee the collections and do all the improvements to our collections journey. Otherwise, it was completely outsourced, both in the UK and into South Africa. That was our team, which fluctuated from 15 to 35 people, depending on the time of year. In utilities, you get 2/3 of your contact over the cold winter months, so we would flex, and that outsourcer model really gave us the ability to flex that resource up and down in line with demand. So as well as all of those other channels, we also had a marker for our most vulnerable customers, and if they were added to the priority services register for vulnerability in utilities, that deployed an extra functionality into their online account and the app, which enabled them to book a call with an agent 7 days a week between 9 and 5. So that would be booked, and we would outbound call those. And in addition to that, our agents would also SMS, they would outbound call, and also obviously email and generate emails from our members. And we really focused on looking at our customer types and building automated journeys using robotics and bots in order to fulfill those journeys to deflect as much as possible coming into our business. So one, better satisfaction, available 24 hours a day, and cheaper cost to serve from our perspective as well as a business. So that internal team of 3 really focused on driving all of those improvements to get rid of as much contact as possible. So our results, quickly, I call it the shaft slide. It's for every £1 we invested in our outsourcers, we got roughly about £11. It fluctuated a little bit back in terms of their collection performance, which was great. We had a really low ratio of agents to customers compared to the industry, and we had really high engagement and payment within the collections journey. Very few people went out to debt collection agency after dealing with us. It was really, really small volumes. They were really engaged. We obviously flexed and set up payment plans and all the good stuff that you would expect to do, but we were really clear we wanted to hold as much into the business rather than send it out to DCA, partly from a brand reason. And all of that meant we actually won Utilities Collection Experience Awards and Customer Engagement and Collections Awards as well for the way that we designed and delivered our digital solutions into our customer base. So it wasn't perfect, nothing's perfect. There was obviously a continual stream of improvements, one of which I would say would be moving to WhatsApp, because it is prevalent, and why teach your customer base to use a new messaging system, maybe, don't know. But we did have our own as well. So it was like, how do we introduce WhatsApp? There was loads of things around that. We had lots more journey work to do to improve our comms. So there was always more to do. And I was just thinking, looking forwards, as I think we all are, Paul mentioned some really good stuff there. Like, for me, I think there's transient financial vulnerability. So people will have periods of vulnerability rather than necessarily permanently having a vulnerability. They'll have it on a transient basis. And I think people that have never struggled before are going to struggle, and helping them navigate their way through options and what they can do will be really important to those. And I think there might be some pride in that. So people feel embarrassed or awkward about finding themselves in that situation. And actually, that's where digital solutions can really help, because they don't have to talk to somebody on the phone about their situation and what's going on. They can interact digitally, which helps them deal with that whole process. So I think the digital focus could really help with that engagement, and particularly for this new group of people that have never been through these experiences before. And I just think, the bots, the AI, the automation is just not going to stop. Companies got a taste of it during the last 2 or 3 years. Customers got a taste of it for the last few years. They pretty much liked it. It's not going to go away. So sort of embrace it and design it in a way that works for your organization and your customers. And I think that then you'll be set on a path to that digital improvement or digital transformation, depending on what your starting point is already. So that's a whistle-stop tour of Sooth and of Pure Planet and what we did there. I'll now hand back to Gerard. Thank you.
Thank you very much again, Mark, with similar thanks there. Let's just move swiftly on, and let's keep the pace up, and we are going to conclude this initial consultancy introduction section with Simon Gregory, who is from Data on Demand. So Simon, if you want to set yourself up, then you can do the last bit.
Yeah, no problem. Thanks, guys. So yeah, good morning, everybody. So Simon Gregory, I'm the sales director at a company called Data on Demand. Thank you to the Saascom guys and Credit Today for inviting us along today. Hopefully should be a good session. So to start off with then, I think there's probably several people on the call who hopefully will have heard of Data on Demand, but there's also probably a reasonable amount who haven't. So just to give you a bit of background and kind of introduce who we are. So we're an alternative provider of UK consumer data, and we're a business who's been set up by a team of ex-credit reference agency professionals. So that includes myself. We're a small team, but we're a growing business who's providing that alternative data to help really any company who engages with an end consumer to better understand that consumer and to deliver better customer outcomes. We work across a number of different sectors currently, and certainly growing into new ones as well. Very much specifically for today, collections industry is a big focus for us. We also work across financial services, across kind of lenders, utility businesses, telecoms, and also into public sector, and some new sectors as well that we kind of move into as well. Things like gambling, gaming businesses, and also into insurance. So the data that we collect and provide is used by companies right across the full life cycle of their engagement with a consumer. So it's used for onboarding, it's used for kind of risk decisioning through affordability, credit risk, vulnerability assessment, and it's also used for customer management, particularly again relevant to today, looking at things like early arrears indicators, and also then the use case right at the back end moves into supporting businesses to identify and engage with customers who are in a debt situation. As I said, core for today, we'll kind of keep the rhetoric around what we do in collections and recoveries. So just looking at the product set, so there's kind of three main products that we provide at Data on Demand. The first one is our ID View offering. So ID View was developed specifically to help businesses identify and monitor consumers who were in vulnerable circumstances. We do that by collating data which is mainly captured through online subprime loan applications, but also supplement that with data from partners such as the VRS. So again, some businesses may be aware of them. They're a not-for-profit entity which provides a database that consumers can self-declare vulnerability to. So through those different data sources, we created coming back to Mark's point before, a transient data set of vulnerability, which currently sits about 3.3 million UK consumers who are showing various signs of kind of vulnerability across financial vulnerability, but also life events as well. Coming back to the collections point, so our FinTrace data set is used extensively, certainly in the private sector across DCAs, debt purchasers, and also into the certain kind of local council partners as well, for identifying new contact channels and providing new insights on their customers in debt situations. And finally, probably less relevant today, but we have a proposition called 4ID, which is used at the front end, helping businesses to identify, verify, and also predict fraud when they're onboarding new customers. So that was a bit of an overview on the products that we provide, the kind of data sets that sit behind that then. So on the screen now, we've got kind of the four key areas that we collect consumer data from as a business. So I mentioned the subprime loan applications. We capture data through there of all the usual things you would expect to see on a loan application. So obviously name, address, contact channel, date of birth, but we also capture some really interesting insights on things like employment status, relationship statuses, the frequency of loan applications, the loan amounts that are being requested, and also importantly things like the loan purpose, and that's quite important information when we come through to looking at some of the vulnerability assessment. And on top of that, we've also we capture data through a couple of other online application processes. One is online competition sites. Another one is online lifestyle subscriptions. So that could be a monthly subscription to a car magazine or something similar. And we also take data in from property portals, which gives us an insight on changing address and property information. So all of that kind of consolidated down, volumes wise, we see about 750,000 consumer applications per month across all those different channels. And within that, then the data set now sits amongst several hundred other variables, key contact information like emails, mobiles, landlines. We have a large and growing data set to support you with communication with end customers. Consumption wise, very flexible. If you think of us in a similar way to you would a traditional credit reference agency or the data partner you work with. So we have manual kind of single search options through our web portal. We also take customers' data via secure batch transfer. We can provide automated data feeds via API. And we also work via a number of platform partners, including, as Paul mentioned before, partnerships with businesses like Sascoms. I'll hopefully move on from too much of the hard sell into a bit more insight, certainly through the day and in the moment in the presentation, but just to try and solidify our value proposition and how we are helping businesses. The three key areas where we tend to add value are first of all, the fact that we're flexible. So we're happy to kind of provide data and services to businesses in a number of different ways. The alternative data sources, so we provide data that you won't see from kind of traditional CRA sources and data you probably maybe taking from current sources at the moment. And the most important one is probably the speed with which we actually deliver that to customers as well. So all our data is captured via API in real time, and every single night we rebuild our entire data set to make sure all of that new data we're capturing and insights are available to end customers immediately. And through that, you will, if you go onto a website, there's plenty of instances of some of these kind of case studies, etc. But this is just a snapshot of some of the results we've been able to deliver to our end clients in terms of RPC rates, liquidation and payment rates, and also the ROIs we can deliver. So just, I'll try and keep this fairly brief, but just I'd like to try and bring to light a little bit of the insights that we provide. So this is an example of a recent kind of summary of an example portfolio analysis we did for an unsecured consumer finance business. So we split the output into the kind of the contact channel they had about their consumers at the start, what we were able to add around our own contact channel information, but then also employment and vulnerability insights. So for this business, if you look at the top, when they provided their data into us, they had contact information for about 74% of their current portfolio. When we ran some insight on that, we found that actually 4% or nearly 3 million of their portfolio, they didn't have accurate contact channel information for. And that can vary kind of client to client. In terms of the insights we were able to append back on, you can see there's quite high rates, over 40% in terms of emails and mobiles, but importantly, getting down to that 12% number, which is nearly 11 million of their portfolio, we were able to identify new verified mobile numbers, which they didn't hold for their customers at that point. There's a big chunk of their book that we were able to highlight new accurate contact details for. And then looking into things like the other insights we provide, 20% of that book we were able to give employment insights and income and expenditure. And finally, the bit which I'm sure we'll continue to talk about today around vulnerability insights, 20% of their portfolio had some kind of characteristics of vulnerability, which we break down high level into 3 categories of highly, currently, and historically. And again, just really interesting, I think, in the current socio-economic climate for businesses to consider that, not just from doing the right thing by the customers, but also the standpoint of regulatory guidance at the moment. And yeah, process-wise for us, running these types of analysis, insights, projects with customers is very straightforward. There's a couple of different steps in terms of due diligence contracting, but we would typically turn a piece of work like this round within, a couple of weeks, dependent on the resource available and compliance questions. And yeah, that's keeping it short as we go on to the discussion later on today, but that's a bit of an overview of Data on Demand, what we deliver. The website's on there, and feel free to reach out to me with any questions as well.
That's great.
I'll pass back to Gerard.
Thank you ever so much to Simon and all the panelists to date. So we're just going to have a wee break now. We'll be back at 12:10 with the sort of more open discussion part of today's webinar, where we shall also be joined by Russell Hamblin-Boone, who is the CEO of the enforcement agency Civia. So that's the consultants plus Russell from 12:10. So feel free to have a 5-minute break, and we'll catch you back then at 12:10. Thank you. Okay, welcome back everybody to part 2 of today's inaugural Saascoms Summit. This is the open discussion part of the event, where we're going to have 4 panelists just talking through in a more general way some of the issues that have been raised in the discussions and also in the questions sent in prior. I'm Gerard Dugdale. I'm the Publishing Director of Credit Today. I'm just going to ask all 4 panelists to very quickly say who they are, just as a reminder, then we can get going with the questions. So first, if we can go with Russell, if you're there, please.
Yeah, good afternoon. I'm Russell Hamblin-Boone. I'm Chief Executive of the Civil Enforcement Association. I'm pleased to be taking part in this event. For those of you who don't know, the Civil Enforcement Association is the primary trade association that represents enforcement agents who recover outstanding debts on things like council tax and court fines and parking charge, penalty charge notices for parking, commonly known as bailiffs.
Thank you, Russell. My co-host, Paul, please.
Thanks. Good afternoon, everyone. I'm Paul Neild. I'm the co-founder, director of Sascoms, digital engagement provider, here to answer any comms questions.
Mark, please.
Hi, I'm Mark Adams. I'm the owner of Saas Consulting, a consultancy company that helps companies move to digital and improve their performance.
And Simon, please.
Yeah, afternoon all. Simon Gregory. I'm the sales director for Data on Demand. We're an alternative provider of UK consumer data. Work across a number of sectors, but specifically for today, We have a focus on providing data to help companies identify vulnerability, but also provide additional insights to support collections and recovery.
I'm just going to stay with Simon there for a second. Just the V word, vulnerability. What is the art of the possible, do you think, then, with data when it comes to identifying vulnerability? What's the maximum that we can do? Is it an art or a science?
It's a difficult question probably to start with, and one we could spend about 12 hours on, Gerard. But I think the important thing is vulnerability will be different for different businesses. And one of the first things you need to do as a business is understand how you define a customer who may be in vulnerable circumstances. So there are clearly regulations out there, dependent on which regulatory body you fall under. There is, again, different views, different requirements of what should be adhered to. But I think a lot of that is pushed back on businesses to create their own view on what makes a customer vulnerable. To answer the question that you asked, which is what the art of the possible is, the art of the possible is quite extensive. So certainly from a data perspective, I think there's an onus on businesses to be more proactive in terms of searching out and looking and storing data, which highlights changes in circumstances for customers, which may put them into a situation that's vulnerable. An example of that might be a change of relationship status. It might be a drop of income, but it might be something like a change of employment status as well. And all those types of data sources are out there. It's also then about how you use them and how you decide to turn that data into actions with consumers as well. And to give you an example, I know a lot of the companies that we're dealing with now who are taking vulnerable data, it's not or data which identifies the potential vulnerability. It's not about going directly out to that customer and saying, "Hi, Mr. Customer, we understand you are vulnerable," but it's including them in certain contact channel strategies and certain contact strategies which open up the possibility to them that support is there. So that, I'm sure we'll talk about strategies and things later on, but that's the art of the possible.
That's great. Sorry to drop you in a little bit at the deep end, but I just couldn't resist the temptation. Let's just take a step back. I mean, we can feed in comments about vulnerability as we progress through the rest of the hour. But let's just go back to Russell with a quick heads up. Yesterday, Russell, I think we identified there's this sort of step change, very exciting, hopefully, in the attitude of local authorities and maybe even utilities as well, in the way that they view this whole business of, quote unquote, debt recovery, getting money back from their clients. We're seeing a step change in which they approach that whole challenge, where they're just looking at communication and softer strategies as a way forward. What would you put that step change down to?
Well, I think, we can't treat all local authorities as a homogenous group. There are, some that are more pioneering and others that will be early adopters, and others will be, looking at their strategies post-COVID. But I think the watershed, the pandemic is the watershed moment where public services are understanding that where they have arrears, people are not necessarily in the position they were pre-pandemic, and some of things like revolving debt and in-year collections are not sustainable for people. So therefore you have to take a different approach. I think that people are starting to realise that to put someone under in financial stress by making demands for immediate payments in the short term is actually going to create harm that is going to be costly long term. And I think this is it's been coming for a while, but I think that the pandemic has helped revenue teams to be able to focus on that, to be able to put cases back to finance departments and the people who are responsible for sort of meeting budgets in the public sector in particular, but also in utilities as well, and being able to move the conversation from collections targets to debt resolution. And I think that technology is a huge part of that, in terms of identifying who people are, recognizing that everyone's different, segmenting individuals in order to be able to meet their needs. So that not so much talking about vulnerability, but talking about what are individual people's needs, because arguably we're all vulnerable to one extent or another, and then you spread your resource too thinly. Identify people's needs and target your resource appropriately, and use technology to engage with those people, to communicate with those people in order to understand more about their circumstances. So I think there's a lot has happened, and I would say that it emanated from the particularly commercial finance sector post credit crunch, and the learnings from that, and now filtering through to other sectors like utilities and the public sector.
Paul, what's your view of sort of whistle-stop potted history then, of leading from the credit crunch back in the sort of late noughties through to the last 2 or 3 years?
I mean, obviously technology's changed in the last decade massively. If you think maybe 12, 13 years ago, that's when the iPhone first came out. Previous to that, it was very simple email, which is an unsecure means of communication. It doesn't always fit everybody's requirements to send sensitive data. And back then, it was a simple outbound call or a text message. Self-serve portals on the web wasn't really a thing. Two-way conversational messages wasn't there. WhatsApp wasn't invented, neither was Twitter. The world's changed in the last decade. Probably from communication standpoint with consumers and organizations in the last probably 4 years. I think if you were doing this sort of thing 5 years ago, you were a very, very early adopter. Probably wasn't as successful, just something that you kind of a tick box exercise, maybe on a proposal or for something that, we've got a digital comms team. About 3.5 years ago, it started to become a lot more prevalent, and then COVID happened, and everybody was sent home, and the organisations were like, "Okay, how we've still got to operate? What are we going to do?" And that really accelerated everybody's digital plans. We saw exponential growth and people wanting to talk about how they can quickly and inexpensively put together a digital solution.
Okay, great. Just a quick question for Mark. I mean, sorry if it's a bit of a cheesy question, but the world has changed, has it not? I mean, to what extent are we going to go back to the old ways of working? Will there be a slight readjustment back, or what's your take on that?
Yeah, well, so I think particularly in organisations now, there's more generations working together than at any other point in history. So in terms of that age range, and there's definitely the Gen Z, particularly the things that they value in terms of their employment are very different to maybe what I would and generations above me. And that whole flexibility, how is really, really important to them. Their development is really, really important to them. So it's not necessarily always about getting the next most senior role. It's about how they learn, how they acquire new skills, how they equip themselves. So actually, they're all tech savvy. They've grown up messaging. They hardly ever phone their friends. They just message their friends. So actually, that's brilliant. They're already used to it and familiar and comfortable using their tools. The difficulty will be getting them to answer a call or make a call actually in the future or now. So there's lots of benefits from having that workforce that's diverse in terms of its age profile, let alone all the other profiles. But that gives challenge and opportunity to using digital tools going forwards, and how you design them in, and the skills that you required in order to get the most out of them, I would say.
Russell, have you got any examples then of authorities or even types of authorities, if you don't want to sort of name names explicitly, that are slightly ahead of the curve on these strategies? And then I might sort of pop over to Simon to see if he's got any direct experience or insight as well.
Yeah, well, there's local authorities and there's also central government. HMRC have done an extensive piloting exercise where they've brought together data from different parts of the organisation. So they looked at benefits data, looked at housing data, and rather than having that work in silos, bringing together what they're calling a single view of the customer, you can form a much better picture of an individual. Back to that point that I made about being able to segment people, and then you can start to understand who are those people who want to pay, but because of the channels that you have are making it difficult for them to pay in the circumstances they're in. Who are those people who should be able to pay and are in arrears, and actually, you know, as the HMRC pilot showed, you can recover significant sums of money of, you know, quite aged debt going back over several years when you change your approach. And you can look at different sort of communication channels, but also things like behavioral science, finding the triggers that get people to respond better. And so these are sort of are starting to become proven techniques. I know sort of in the guys in consumer credit will be rolling their eyes saying, yeah, well, we've been pretty much doing that now for a couple of years. But, you know, it's always the case that you'll get the pioneers, you'll get those who will go through the teething problems, and then you'll reach that kind of critical mass. And I think, you know, so the technology, some of the technology that's out there, some of the people you would have heard from this morning, reaching that critical mass, it's got those proof points that means things like utilities and the public sector are prepared to take, you know, to make that investment and know that there's less of a risk to them, which is, you know, where they have a lower risk profile than perhaps sort of fintech firms and things.
Gerard, can I just interject there?
Yeah, of course, sure.
Some real world evidence. So we work with external collection partners who are working on behalf of government, for example, HMRC and DVLA. Now, these are proven, high-performing collection agencies, but what they've seen is a real appetite from government bodies. You know, they service their stage of collections. A real appetite from those government bodies to use new technology. For example, one client, huge benefits from using two-way conversational SMS, for example, for these government agencies and secure chat. So it is trickling through, certainly from the, as Russell said, perhaps the pioneers in consumer credit agencies who have gone through the teething problems, etc., who are now introducing it to government agencies, and they're beginning to see the benefits, the efficiencies of using tech.
And just to add, we're doing a double act here, Paul. Just to add to that, the other thing that we have to take into account post-pandemic is that creditors, whether private or public sector, are encountering a new cohort of people who are facing financial problems that have not ever been in debt before, and therefore we have to make sure that our systems and our processes are not just designed for, you know, people in long-term debt and things like that, but are actually responsive enough to people who are probably quite capable of managing their financial situation. They've hit, you know, an event, a life event, redundancy, or whatever might have happened as a result, or ill health as a result of COVID. They're able to manage, but they just need a little bit of guidance, money advice, perhaps, as opposed to debt advice. What, you know, pre-pandemic we were talking about, even the government was just talking about those who were just about managing. Well, those just about managing people, some of them got tipped over the edge as a result of COVID, and now we need to make sure that it's about using technology to respond in the right way to people. Some people need a lot of hand holding, some people don't need to be patronized.
Is it the case that central government is sort of leading the way on this, and local authorities can sort of sit back and wait for rafts of guidance, or is it really incumbent on the local authorities to sort of pick up the gauntlet themselves and to take the initiative on assessing where they currently are and how they can improve?
I mean, I don't want to do all the talking, so Paul can probably talk about this, but the big change, or one of the big changes, is the Digital Economy Act, and that private sector partnering with the public sector can suddenly get access to a whole raft of data that wasn't available before. And so teams in the Cabinet Office and the Treasury are there to set up sort of pilot schemes and data sharing schemes, and supporting all sorts of public bodies to be able to interrogate the data that's held centrally and locally, and more importantly, to share that data with the private companies that they're contracting with. And that, I think that's been an evolution.
Thanks. Simon, do you want to come in and pick up this theme of segmentation of data, and how we're sort of drilling down as best as we possibly can to give like the right strategies at a very individual level?
Yeah, definitely. So the segmentation part is part of that kind of data collection on individuals in the first instance, but it's also looking at interactions you might have had with them before. I mean, Russell made a good point, which I think we've heard a few times in different sessions and different conversations, which is you will probably have a large part of your portfolio now who may be new to debt because of the situations that have happened over the past couple of years. What we've actually seen from a lot of clients is they're spending a lot of time thinking about not just the channels they use, but also the messaging that they use for certain cohorts. Just because somebody is in a debt situation, they may not understand how debt resolution works. They may have never have been in that position before. So thinking about just maybe even at the top level, just approaching those people who you're dealing with for the first time in a different way to people who are potentially in that situation more regularly is certainly something we're seeing businesses do. An example of that might just be a light touch introduction to explain to them the situation they're in, not even asking for, kind of payments or resolution in the first interaction, but just having that, a bit similar to the debt advice point that was made, just giving them an introduction to, this is who we are, this is why we're contacting you. First instance, really, we'd just like to know maybe what your preference for contact would be. So if you can find out, early doors with an introduction, how somebody would like to be contacted, that puts you in a much better position to kind of push them down certain strategies and communicate effectively post that point. But if you have dealt with somebody before, again, maybe you've been able to capture their preferred process. And it depends how complex you want to get with that. We mentioned if you go into the kind of the private sector and into the fintechs, they may have several different digital channels based on the digital strategies that they put people down, depending on the information they understand. But if you're starting from a position of really only having a couple of different contact channel strategies, then the first part of it would just be, okay, can we understand the best method of communicating with the individual? And can we understand a bit more about their circumstance, which can help us to put them down a more effective strategy?
Okay, that's great. Mark, do you want to chip in on this theme as well? I know segmentation is a strong part of what you do, or what you're aiming for.
Yeah, actually, I was listening to Simon thinking, yeah, that's the approach that we were developing. So if somebody missed a payment for the first time, we'd obviously acknowledge it and say you've missed a payment, and we would reapply. We wouldn't necessarily do anything more than that. There was no sort of active chasing for that payment. We also made sure that we built loads of online resources, information, tools, links out to third parties that could they could have conversations with if they wanted to, if the debt was broader than just ours. And we made sure we signposted all of those. Again, it was quite gentle, quite passive in many ways, but it's just like, here are some tools, here's some links, here's some more information if you want to go there. And you know, that was primarily for people that had been in that situation for the first time, just so that we could up their knowledge and help them specifically about what we do, but also in a broader context as well about managing their finances. For people that were repeat non-payers, we had a faster track process for them in terms of the comms, and we would move to SMSing, for example, much earlier, much quicker with those to get them back into conversation with us. So it's all, for us, it was all about making sure that we can get in contact with them, because if we can start interacting with those people pretty much all the time, there's something that we can come up with. In the majority of cases, we were lucky that we were able to do that. So it's about getting them to engage in one way or another if they are unable to pay. For those that can pay, and you know, we have online tools where they can go and do that, great. But otherwise, it's literally about trying to get them to engage with us. We also used a third party under a different brand name to contact on our behalf. They wouldn't collect any money whatsoever. What they would do is just try and get that engagement, and then they would feed that customer back into us so that we would have the specific conversation about their account and about payment plans or whatever the right thing was. So we consciously removed our brand and introduced another one before we'd ever talk about sending it to debt collection agency, just for those that weren't engaging and responding to us. So that might be digital letters, for example, things like that we would use through those partners.
Okay, that's great. Paul, do you want to sort of chip in anything at this point? And I wouldn't mind trying to start to wrap up. I mean, we've sort of linked like vulnerability with this sort of theme of segmentation. Is there anything sort of additional you want to come in on?
I think I just sort of really endorse what the other guys have said. That contact, that establishment of contact is key. Our clients, when we poll them, are seeing more people in debt than potentially before, as in first time. I think Mark mentioned it in his presentation about the pride factor. The traditional 8 o'clock till 5 o'clock telephone calls may not be sufficient. You know, it's always going to work for some, and you're always going to need it, but there are going to be a pocket of people that would prefer to discuss this digitally. It removes that barrier of having a conversation. Regardless of demographic, you know, we check our platforms to see what age range people actually use digital for, and it's actually across all the age ranges. It isn't just primarily the youngsters, the Gen Zs. You know, we've had people accessing the portal that's 70 plus years old to go through self-serve options or read digital letters. So yeah, I would just say that it's opening that dialogue, and by giving your customers the choice on how they do that with you, you're empowering them at the start of it. They're beginning a very scary process for many to say, well, actually, I'm in control of at least how this organization speak to me, and therefore I can at least discuss it on an even foot to get a resolution. And it's about getting a positive resolution, not just a payment.
Thank you. Russell, is there anything sort of finally you want to add to the vulnerability theme? Anything on the sort of policy side, perhaps, maybe not. And then I wouldn't mind sort of moving on to the whole theme of like organizations sharing best practice.
Well, I mean, I would sort of say that you know, we need to be clear that vulnerability doesn't necessarily mean inability to pay. And I think that's one of the things that, you know, segmentation is helping us to understand. I think the other thing that's being sort of developed through in sort of particularly in consumer credit, and you know, Paul's part of it is the self-serve option means that, you know, when we're talking about different cohorts of people, some people might be able to manage their debt, but they just need the technology to help them to be able to do that. They need to be able to set up, you know, for example, flexible repayments. Lots of people with volatile incomes now, 0-hour contracts and things like that, don't want a direct debit where the same amount of money is going out at the same time, because that's they're struggling to manage that, but they might be able to fluctuate what payments they can make, so that sometimes it's a minimum payment, sometimes it's a little bit more. It's the sort of thing we saw during COVID, where people were actually had a bit more control of their expenditure because there wasn't any, and so we're sort of paying off things. And I think that will be the next move, is to give people a bit more control over restructuring and repaying their debts through payments.
Okay, that's great. That sounds very exciting. And just this point about sharing best practice, it was a very strong theme, I think, that came out of the enforcement session we did about a year ago. I mean, is there a way that we can help that as an industry, help the sharing of knowledge and techniques?
I think I mean, I think it goes on all the time, you know, between the private sector and the public sector, where there are partnerships. We're seeing that happen increasingly. I think the whole conversation about what you know, enforcement almost seems like a heavy-handed approach, because there's so much more to it now. You know, enforcement by bailiffs makes people think of, you know, burly guys knocking on doors. Well, you know, half of collections is done exactly the same way as DCAs would do their collections, through a different sort of business structure. There's no, you know, they don't charge fees to the creditor or anything like that, but the kind of the same tools to engage people and to recover debt remotely, you know, is being applied equally.
That's great. Paul, anything further to add on that? I mean, I want to make sure that I'm you know, covering all the important points. If there are any points that people want to sort of chip in on at any part, then please do so. But I wouldn't mind sort of spending sort of 5-10 minutes just on how councils, how local authorities and utilities can actually begin the process of assessing how they are communicating with their customers, with a few obviously looking to make improvements.
Sure. Well, I guess it's identifying the current strategy. What do they do? Is it a case of the old traditional methods, sending a letter, maybe sending a very bland email? You know, are those emails even going through any sort of email check for DKM or SPF security? You know, are they actually getting to the inboxes, or are they going to spam filters? You know, what's active management for that? Really quickly reviewing, and it would only be a quick review of what they do. You know, what response levels are they getting? I would anticipate that certainly for local councils, governments, etc., their right party contact rate will be much higher than the credit consumer industry. So the chart that I previously showed, you know, I would anticipate their right party contact rates to be higher.
Yes,
but that might not always be the case. And look at the forms. I'm sure that they already check their outbound dialing patterns. You know, when's the best time to call certain people. It's looking at that and then looking at how they can integrate all the other solutions. You know, there isn't one solution best fit for everybody. That's not the case. I think it's having them, or as many of them that you need in your kit bag, where you can be flexible to say, okay, well, we know the telephone isn't working, or we know letters aren't working there. Why don't we try something else? And redefining the contact strategy with what's available.
Okay.
Just to jump in on that, Gerard,
Yeah.
as well. I was just going to say that I think the big bit is for local councils and other businesses just not to try and approach the problem on their own. So there are lots of other people out there. There's lots of these forums, but also just engaging with consultants like Mark and businesses like Sascom and ours at Data on Demand. We're not obviously we have a commercial approach, and we're there to try and make some money, but we are also as well there to give advice, because if we can't provide advice on where we add value, then there's no opportunity for anybody there. So I think just engaging, having those conversations, it's whether it's through partnerships or however they're kind of solving the problems, it's not as it used to be a case of having to spend millions of pounds on a expensive system that takes a long time to implement and may change in a couple of years. It's much more, there's many more ways to skin a cat, for want of a better phrase, at the moment, and many more options out there. So I think it's just about kind of starting those conversations.
Okay, how long of a process are we talking about here? I mean, how long would you want to spend sort of doing a little bit of a consultancy work for a typical organisation?
Well, I certainly can't speak directly for the other guys, but from our perspective, some of our engagements can be as short as, a couple of weeks to give them a full overview of not just the existing portfolios they hold, but also the types of process they may want to set up at a very high level, just to refresh data and understand more about the consumers they're dealing with on a regular basis. I'm sure Paul can talk more about how quickly you can implement digital strategies and things like that. But it depends on the size of the project. But certainly, to get an initial view of how you're working at the moment and where there may be some quick wins, you're talking about a couple of weeks of engagement.
Paul, do you want to quickly chip in there before?
I would mirror exactly what Saas said. The cloud SaaS products have made it much easier now for companies to take on suppliers. There's obviously some compliant checks which you would anticipate, checking the ISO standards, etc. of suppliers. But if you're talking all that's done and you sit down with a council, for example, understand where they are and where potentially we could add value, you're looking at perhaps under a week to get a trial concept out and going. Firms should be offering this with no commitment. The products and services should speak for themselves, as they do with many other customers. So, depending on the project, taking away the compliance element, legal contracts, if you're just a simple trial, less than a week for an organisation like us.
That sounds promising, Mark. And also, what are the key personnel that you absolutely need on board? What are the key buy-ins then from the organisation that you're trying to help?
Yeah, so it depends on obviously what resources you've got in terms of how you're structured, because as I said in my presentation, you need the digital channels, but you also need to think about the organisation structure. For me, it all comes back to what's your data look like? What data have you got? Because one of the things I'm a fan of, rather than taking that big leap of wholesale change, I like to do some test and learn, some A and B testing, just to see what comms work or generate a response or get engagement. Even if it's a bit of a bad response, it's like, right, we've got their attention. You just learn from doing that sort of A/B testing of different things. So having somebody that can access the data and make that data clean is my language. Simon will tell me off for that because he'll have much better language than me. But that is super, super important for me. Whoever is writing the comms, they are absolutely, you need to bring, so in my commercial world, it would be the marketing team together with the operational team, because you don't want it so marketing speak that you're not sure what the messaging is, and you don't want it so operational that it just is very factual and maybe less engaging. You need those two people, the people with the knowledge of what information has to be shared, together with how can we package this in a way that gets somebody to engage with it, respond to it, interact. So those are the three critical. The other bit is then, if there is a call to action, and that is and you need a human at the end of some of that, then making sure your operational teams are briefed, primed, ready, know what's going out, know what to expect coming in as well. So those are the critical ones for me.
So what's call to action? That's definitely we've got the go ahead, is it? And
so the call to action would be for a customer to do something. So whether that's send us an email, give us a call, send us a text, whatever it might be, so that people are there ready to respond to your customers. The worst thing in the world you can do is get engagement and then not have people there to respond to it, because they won't do it again. So you just got to be, you've really got to do that forecasting and planning of, if we send out 1,000 of these, how many are we going to get back, and what does what will that responsive look like? And so that's one of the learning points of doing it, is you will learn, well, if we send it at 3 o'clock, how quickly, or what does the profile of response look like? When are they responding when they're sat down watching EastEnders at night, or are they responding absolutely immediately to that messaging? So that's why I say it's learning is really important for me as somebody who would run an operation. That is absolutely critical to make sure I can respond to the demand that I've just created.
Thank you.
I can offer a real world example of that. So we went live with a client on digital letters. It was a Friday afternoon. They're an external collections company, notoriously quite quiet for that particular sector. And they sent out, I think they programmed around 10,000 settlement offers to go out. And these were to customers that had got to the end of the contact strategy chain, and they were offering a high value settlement discount to make a payment. It essentially, within the first 20 minutes of sending, it effectively flooded the inbound contact center, the response levels. So yeah, what Mark's saying, capacity planning is quite key. Picking a provider that understands this is also quite key. You know, it's not about sending. It's not like a Royal Mail drop with digital. You're not sending 1,000 out and you're not actually sure when they're going to get there. Are they all going to land on the mats the same minute, or are they all going to land over 5 or 10 days, or are some going missing? You know, with the right platform, you can schedule it out. You can pause the dash. You can monitor your inbound responses, your website responses. So you can dynamically allocate the send capacity, which is quite important for resourcing. And one further thing that Mark was touching on about the operational people, I think it's also important to have some sort of analytical person available, whether that's operational or IT, because there are files for platforms, external platforms to take, and also to deliver back with valuable MI metrics. And the key to the success of any trial is understanding the deliverables. So yes, somebody that's analytically driven would also be part of a sort of a trial team, I would suggest.
Thank you. Russell, I know we're trying to sort of blend a little bit here, the technical and the political in terms of organisation. Are there any sort of big sort of common barriers, obstacles, stumbling blocks that we might sort of trip over if we're trying to change the system?
Change the system in what sense?
Just to ramp up communications strategy, just thoroughly modernise it, set out our stall for the next 2, 5, 10 years.
Well, I mean, in the public sector, it's obviously the biggest barrier right now is going to be what the government does. If it imposes austerity measures and then makes similar demands on the public sector to recover revenue at the same levels, then those two things don't mix. And so I think that it is going to be much more about using technology to reimagine debt recovery in the public sector, and to rethink what revenue collection looks like. The outcomes can still be the same. They just might be over a longer period of time, but you might end up having a greater benefit long term and less cost long term. But it requires some more sort of advanced thinking than perhaps most governments allow themselves.
Okay, so in theory, it can be an easy sell, but in practice, I mean, the proof of the pudding just is in the eating and blah, blah, blah.
Yeah, I mean, I wouldn't say it was necessarily an easy sell, but I think there are opportunities to understand more about people's circumstances, and therefore, adapt to them and respond to them, rather than taking a sort of a policy-based sort of standard practice, homogenous approach to everything.
Okay, thank you. Have we said enough about data? Simon, do you just want to chip in here as we start to wrap up? In terms of data and how much we can milk, the actual data and the potential sources of data.
I think the big thing is just for to put the message out there to people that if they think about the kind of traditional data sources that they may have used historically, it's important to shift the mindset away from that, because if you think of all the different things that have happened in the world recently and the kind of socioeconomic changes we've seen, we've had COVID, we've got the current cost of living crisis. Effectively, we've got a very volatile situation across the globe. And what that drives is increased risk. Whenever there's increased risk, people need additional data sources to understand the new circumstances that consumers find themselves in. So just going back to a CRA and checking somebody's situation once every 6 months is not going to be helpful for you, because the speed of transition of customer circumstances has increased dramatically. So it's about opening up the idea of, forgetting about kind of how you've done things before and trying to put the real world examples of how things are now and look at all the alternative data sources that are out there, because obviously I would push that from our side, but there's multiple of them out there that firms can use.
Okay, that's great. Anybody want to chip in on that point? If not, we'll start to move on to concluding remarks. I mean, we've had the potential red flag of more austerity measures in the future, but if the panelists want to send out a final message then for the two sectors that we've been dealing with today, local authorities and for utilities, what would it be? What is it that we need to be aware of, and what are the potentials and possibilities that we can reach out towards when we look to improve our communication strategies? So, Paul, do you want to have a go at that one first?
Sure. I think the takeaway points are certainly from the research that I've done with our clients and listening to everybody else, is we're all on the same page. You know, the economic environment is tough, potentially going to get tougher, potentially more people in arrears. Credit files have never been more valuable to anybody in society. We all need credit to revolve now. It's not 40 years ago. People's, as Russell said, just because you're vulnerable doesn't mean you have an inability or a lack of desire to pay. It's just your circumstances have changed. So I think my message is going to be that I think we can accept that arrears levels are going to go higher, potentially going to get tougher to take certainly full settlements. We're going to have to potentially look at smaller payments over longer terms, and it's looking at your structure. How are you going to deal? The question that I ask is, how are you going to deal with it? Do you have sufficient self-serve? Are you just going to wait for people to communicate with you? If so, how? What options available are there to empower them to talk to you at 9 o'clock of an evening, or for at 1 o'clock in their lunch break via Facebook Messenger? How are you going to integrate with that? Because this is going to sort of, it's going to lead to your ability to reach a limit, whether that's an engagement limit, a collections limit. We all know it's tough in the labour market to just recruit. It's not as easy just to go get another 5 or 10 advisors, revenue advisors, put them on the phone. It's a tough old world. So yeah, look at everything you've got, your objectives, and think, how do I communicate with people? What would I do?
Thank you. Mark, please.
So yeah, so I think there's not a question really about do you do digital or don't you. I think you do. It's just the approach that you take as an organization. So as well as the technology, I will repeat my thing. I think you need to think about your organizational design of your operations, just to make sure that you can maximize whatever comes back to you. I think that's really, really important. I think you need to make sure your agents are trained really well in flexing and negotiation, because I think the outcomes. There could be a broader range of outcomes that are required now in order to get people to pay. So I think that skill is going to be really, really important for people. And then my other bit would be test and learn and then quickly change. So by having platforms that enable you to do that quickly and make adaptations quickly, I think that's really good and a really important approach to take.
That's great. Thank you. Simon.
Yeah, I think the main change would be just from a kind of from the top of the business or the top of the organizations down, changing the view of collecting a debt to servicing a customer, and trying to, the more you can understand about that customer, the better the outcome that's delivered for them should deliver a better outcome for you as an organization as well. And it's just about making sure businesses are thinking about being as flexible as they can because of all the changing circumstances, to be flexible in how they service customers as well.
Flexibility. Thank you. Russell, any last comment, please?
Yeah, I think it's I suppose following on from what people have said, you know, if you set aside those people who've got severe debt problems, and you're probably going to have to take a completely different approach to them and probably not going to be recovering debt from them, but then look at the, you know, once you're looking at different cohorts of people, you can see that you can help them, you know, where they've got priority debt, separate their ongoing payments from their arrears and take a different approach to both. You know, if someone's missing a payment, we can find out what the circumstances are for that. It might just be a blip, or it might be starting on a path which means they're going to get into arrears, which means it's going to cause you more problems. So treating people who are ordinarily good payers in a different way to those who are carrying debt. Nobody wants to carry debt and everyone wants to pay. So it might be a case of helping someone to manage their ongoing liabilities, their ongoing payments, their priority payments, so that they're not getting themselves into more debt, while at the same time recognizing they might need a bit longer to clear that debt that's sitting behind it. So don't kind of eat into that, causing people more problems with their you know, their immediate and recurring bills.
That's great. Well, we're just coming up to lunchtime. I'm going to say a big thank you to Darren Swales, who says it's been an incredibly informative session. So thank you back to Darren. And my heart and gratitude goes back to all the panelists for attending today. We are going to cobble together a short report in the next couple of weeks that will be circulated to all the panelists for their approval, or otherwise hopefully that they'll be happy with it. And we will produce a short 3-page training guide for councils and utilities by the end of the month, all being well. My final thanks, as ever, to Anna and James on the technical side, and enjoy the rest of the autumn as we slide into winter, and all the best to you all. Thank you.